Assalamu alaikum. This is Mohammad Ishar Hospital, Department of Banking and Insurance, University of Rajshahi. We know that banks is very vital part of our day-to-day life, and economic purpose is served by the banks. Without banks, the economic purpose is very hard to serve the general people. But the banks not perform all the time same. Sometimes the bank face the mismanagement. That's why the bank become a collapse. Now today we discuss about some banks, the, the bank which already lost its business due to the mismanagement. Now let's start. This presentation is presented to MD Shaguran Sir, Assistant Professor, Department of Banking and Insurance, University of Ranchi, and the fellow members are the presented by the presentation. This presentation group member will also provide their own introduction in their own slide. And we are from group one, and we continue it. Our presentation topic is First Republic Bank collapse. This presentation will cover the following area as bank details, timeline of major events, moment of failure, reasons of failures, and what are the lessons we learned from this bank collapse. Now, I already introduced myself, MD Ishwar Haptutul, student ID 18105371, and my part is bank details. Now, to the introductory part, the First Republic Bank is a San Francisco-based bank. It's situated in the USA and its headquarters is San Francisco, California. The bank is founded in 1985. This bank has performed 85 branch for its activities. The bank has good assets on almost 200 billion before June 30, 2022. But the bank collapsed at May 1st, 2023. The bank is a private bank. The bank provides their services to the wealthy private management party, provides clients in United States, and the bank is seized by the Federal Reserve Regulatory Authority in May 1st, 2023. And finally, the bank sold to the JP Morgan Chase. History of the Republic Bank. The bank Republic Bank history is very beautiful. The bank founded in 1985. It has acquired by several institutions and sometimes it is merged by the several parties. The bank began with 1985. If we see the branch chart, we can see that the bank established and start journey in 1985. The bank received a high rating on services and high rating from the credit rating agencies. The bank received the best award banks. In 1993, the bank acquired Silver State Theft. 1998, the bank acquired the Trainee Walmart and Otman and Com. And finally, it's acquired Starbucks. The bank had listed in Nasdaq stock in USA. Now we can see the bank is approved by the First Republic. Banking activities is vast for their regional area. Offer and services of First Republic Bank. The bank provides the general banking service as commercial banking, real estate lending. It's also performed in money market, provides saving accounts, saving certificates, saving deposits. The bank provides the brokerage services, asset management services, and trustee custodian. Collapse of the First Republic banks. The First Republic Bank's collapse is the second largest bank in the history of USA. The bank has a high value of uninsured deposits and its wealthy customers like to keep, but when the amount is withdrawn, the bank faces a crisis. The bank has a high loan deposit ratio, 111%. That means $100 deposit is provide $111 loans. The banks have uninsured amount is 67.4% is high value, very risky for this bank. Present situation. The bank full deposits are purchased by JP Morgan Chase. The bank now is delisted from the stock exchange and it's a part of JP Morgan Chase Bank. That's all from my side. Now I would like to invite my next team member, Samira Jamal Pranti, to continue the presentation. Thank you.
Thank you, Tutul, for giving me the floor. I am Samia Jaman Prati, student ID 1812037106. Today I discuss about timeline of major events. Establishment of First Republic Bank. First Republic Bank was founded in 1st July 1985, marking its entry into the financial sector with a mission to provide high-quality financial service. First Republic Bank began operation on July 1st, 1985 as a California Chartered Industrial Loan Company. It became a public company via an initial public offering in August 1986, selling stock at $10 a share. It was established to provide relationship-based banking services to high-net-worth individuals, business, and families. Service expansion. First Republic Bank and its subsidiaries provide private banking, private business banking, and private wealth management. A bank expand its services by 60 offices. First Republic Bank offers private wealth management services such as investment management, brokerage, and trust and custody services. Asset management milestone. First Republic Bank achieved a milestone in asset management, gaining recognition for its success in attracting high net worth client and managing their portfolio effectively. 2012 was most successful year ever in terms of business results. Bank asset total 181.1 billion dollar and wealth management asset is $279.4 billion. Common milestone may include reaching a specific level of asset under management. Corporate social responsibility. Republic Bank was announced the launch of its power to make a difference. Corporate social responsibility program with the theme of in the business of doing good. The bank plays $1 to $5 million over the next 5 years toward initiatives focused on health and wellness, poverty alleviation, sustainability, entrepreneurship, arts, sports, education, and culture. Now I invite my next team member, Murium Akhtar Mitu, to continue our presentation.
Thank you, Pranti Samiha, for giving me the floor. Here, Murium Mitu, student ID 18 12 13 7108. Today, my discussion topic is about sign of financial instability, regulatory scrutiny, financial downturn, and regulatory intervention. Sign of financial instability. On December 2022, DDT kicks down the door. By December, things began to look dire. Some banks were feeling pressure because if there were sudden bank runs with depositors pulling out their funds, they didn't have enough cash to cover the demands. The lack of liquidity would quickly turn into insolvency. On that time, First Republic also faced liquidity problem and moved toward insolvency. Regulatory scrutiny. On March 2023, chips start falling. First Republic had something of a specialty in high net worth individuals. In mid-March, the bank announced that it had access to a total $70 billion in additional funding, if necessary, rather than count strong. It increased the wind speeds. It took 11 big banks putting another $30 billion in deposits into the bank, keep danger at bay for a while. Financial downturn. On April 2023, problems come home to roost the First Republic. By late in April, the problems for First Republic hadn't stopped. The bank was reportedly looking to sell between $50 billion and $100 billion in assets and had reported that deposits were down by 40.80%. from the previous quarter and 35.5% year-over-year. Borrowing were up 18.4 times from the previous year, from $5.5 billion and $106 billion. It was unsustainable. Regulatory intervention on May 1, 2023, First Republic is born. On the early hours of Monday, the FDIC finally closed the bank and sold it to JP Morgan. The deposits were bought by JP Morgan, eliminating the need to provide additional coverage. A loss share transaction on single-family residential and commercial loans will share losses and potential recoveries on the loans to maximize recoveries by keeping assets in the private. That's the summary of the overall occurrence. That on 2022, there occurred sign of financial instability, and on 2023, there occurs regulatory scrutiny, financial downturn, and regulatory intervention. That's all from me. Now I am requesting Ismat Jahan Evia to continue our presentation.
Thanks, Moim Akhtar Mithu, for calling me. I am Ismat Jahan. My student ID is 1812037114. My presentation topic is moment of failure. The critical moment of failure for First Republic Bank was marked by a perfect storm of financial challenge. The bank faced a sudden and severe crisis that included a significant spike in non-performing loans, deteriorating asset quality, and a loss of confidence from both investors and regulators. This led to a rapid decline in the bank's overall financial health, making it incapable of meeting its obligations and sustaining its operations. The bank faced challenges in complying with regulatory standards and requirements. The bank's heavy reliance on certain sectors made it particularly vulnerable to economic fluctuation, and the failure to diversify its portfolio left it exposed to systematic risk. Now, I'd like to invite our next team member, Muhammad Ali Hussain, to continue our presentation.
Thank you, Ismat Jahan Evia, for giving me the chance to discuss about our presentation. I'm continuing the remaining part of our presentation, which is moment of failure. Here, I'm discussing some data that provide sign before failure. The bank, the First Republic Bank, the first sign moment was shown in 13 January 2023. The time interest rate expense will be increased almost 153% from the period year. And the second sign of failure, First Republic Bank, is 18 March 2023 is failed to recover from solvency. And another date that we see here in 10 March 2023, financial regulators closed Silicon Valley banks and starting midday move as the bank provide incapable of meeting withdrawal request. Share First Republic slide almost 29% between March 8 and March 10. Investor look minimize exposure and closest part. And next sign will be discussed in here. It is 24 April 2023. Following a fairly quiet month for First Republic, share actually rose nearly 25%. The bank delivers a downside delightful earning reports, disclosing its staff rate at a 41% outflow in deposit during the first quarter of 2023. And the final date of the bank, the final date of failure, it was 1st May 2023. First Republic Bank is no longer after the Federal Deposit Insurance Corporation announced the closure of the bank and sell most of its deposit and assets to JP Morgan. Thank you. That's all of my side. I would like to invite our next team member, Shora Haldar, to remaining our presentation.
Thank you, sir. This is Saurav Haldar and my bearing student ID is 1811037139. Today, here I am going to discuss about the reasons of failure of First Republic Bank. If I have a look at what happened to the First Republic Bank, then we can saw that the First Republic Bank was the San Francisco-based regional bank which focused on high net worth clients, and it's closed in 2023 and was acquired by JP Morgan Chase. Among all of the reasons of failure of First Republic Bank, the most prominent reasons of failure is that a large proportion of First Republic Bank of deposit exceed the limit for coverage by the Federal Deposit Insurance Corporation (FDIC). If we look at the following table, we can saw that the total deposit in December 2022 was on $176.4 billion. But the total deposit in April 2023 is $92.6 billion. And the total deposit of uninsured amount in December 2022 was 119 billion. And at the 2023, the total uninsured deposit was 8.4 billion. Now, if I going to discuss the major reasons of failures of First Republic Bank, then we can saw that the first reason was the uninsured deposit, which I have already discussed. Another two reasons, the lack of liquidity and the interest rate risk, which as I can discuss my next slide through Camel's rating and the analysis of the financial performance of the bank. First, if I going to discuss then what is Camel's rating. The First Republic Bank high risk factors include the Camel's rating risk factors. Camel's rating risk system, which is based for the model of regulator developed to assess the risk for individual banks. The Camel's rating evaluates the 6 elements of a bank health. It's capital adequacy, asset quality, management, earnings, liquidity, and sensitivity to market risk. For First Republic banks, the 3 Camel's rating elements indicated as high risky, and they are the sensitivity, liquidity, and earnings. If we look at the graphical representation of this Camel's rating, then we can saw that the rating sensitivity is 5 and the rating of liquidity and earning is 4, which is considered as too much low for the First Republic Bank. Now, I am going to discuss about the balance sheet of the First Republic Bank. First Republic Bank, the total asset grew in Q1 2023. But if we look at the total deposit, which plunged at dizzying rate on 41% at the same period. If we compare to the total deposit from 2023 first quarter to 2022 fourth quarter, then we saw that there is 41% decline of the total deposit of First Republic Bank. On April 2023-25, the First Republic Bank reportedly looking to sell it as much as 100 billion of its loan and its securities to reduce its dependency on the borrowing and its boost to margin its net interest profit. But according to the Anderson, if the bank has liquidated its all of its assets, but there would have been a negative impact on the net value of the bank's assets. Now, if I discuss about the First Republic Bank's profitability analysis, then in this figure, I will show that the First Republic Bank net interest margin, which is sequenced by higher borrowing cost and a minimal increase in the net interest income yields. From the graphical representation, we can summarize that the net interest margin, which dropped from 2.4% to fourth quarter of 2022 to 1.71% to first quarter 2023. And if we look at the return on asset, the return on asset of fourth quarter 2022 was 0.75%, and the return on asset of first quarter 2023 was 0.49%. And the return on equity is also declined in a sharp rate. From that graphical representation, we can conclude that First Republic Bank also failed as because of the return on assets decreasing, return on equity decrease, and also their net interest margin also flop in a high rate. Last, now the First Republic Bank's liquidity analysis. Basically, liquidity measures the capacity of a bank to fulfill its respective obligation. But if we look at the liquidity position of First Republic Bank, a number of metrics highlighted the challenge First Republic Bank faced. First Republic Bank's liquidity ratio dropped more than 50% from quarter 4 to quarter on 2023, and its debt to total asset ratio was 4.93% at first quarter 2022. But if we look at the first quarter 2023, which the debt to total equity ratio is 45.97%. There is a great increase of the debt to total equity ratio. From that viewpoint, we can say that the and there are another two reasons of failure for the failure of First Republic Bank is the liquidity crisis and increasing the debt to total asset ratio. That was the major reasons. That's why the First Republic Bank fails. There's some another reason of failure for the failure of First Republic Bank, which will be discussed by my next team member Miroza Islam. Thank you, sir.
Assalamualaikum. Myself Miroza Islam, student ID 34. Now I am continue the remaining reason why the First Republic Bank was failed. So there are many types of reason that was discussed before my team member. Now I am continue the remaining reason why the First Republic Bank was failed. So here the another reason was the unexpected withdrawal of the deposit. After analyzing the financial statement of the First Republic of the bank, we found that time their loan to deposit ratio was targeting to 111%. That means the First Republic Bank that time loaned more money that it collect as a deposit, and this led them to the chance of lack of liquidity, and this led to the loss of faith of their customer, and suddenly for that reason they unexpectedly withdraw their money, and that time their withdrawal deposit was more than 100 million of dollar, and it was most of 41% of their total deposit, and it was found in 2023 in March. And again, if we see the another reason, that is they cannot resolve the challenge with the lack of liquidity problem, and that affect their funding problem, and this lead to affect their profitability, and that there's all things also downgrade their credit rating. Another and last reason was the mistrust in the regional bank. That time, the collapse of the Silicon Bank Valley and the Signature Bank earlier in the year, along with the credit rating downgrade, investors are increasingly concerned about their keeping their uninsured deposit in the regional bank. That also lead the lack of liquidity of their First Republic Bank, and this was the only main reason that led to the First Republic Bank to failure. And this was my topics which I'm trying to explain here. Now welcome to our next team member, Srimad Bhagavat Tripura, to continue our presentation.
Adab, myself Srimad Bhagavat Tripura, my student ID 1810337147. Today my presentation topic is lessons learned. The rise and fall of First Republic Bank offer valuable lessons for the banking industry. First of all, robust risk management. Financial institutions must prioritize robust risk management practices to identify, assess, and mitigate risks effectively. Regular stress testing and scenario analysis can help anticipate potential challenges and prepare these institutions for adverse situations. Secondly, regulatory adherence. Strict adherence to regulatory standards is essential. Banks should prioritize compliance and establish mechanisms to consistently meet regulatory requirements. Proactive engagement with regulatory authorities can help address concerns before they escalate. Thirdly, diversification strategies. Banks should diversify their portfolios to reduce exposure to specific sectors of type of loans. A well-diversified portfolio can help mitigate risks associated with economic downwards or industry-specific challenges. Fourthly, governance reforms. Strong corporate governance practices are crucial for maintaining the trust of stakeholders. Boards of directors should actively diverse management decisions, ensure transparency, and foster a culture of accountability throughout the organization. And finally, continuous monitoring and early detection. Regular monitoring of financial indicators and early detection of warning and signs are essential for preventing a crisis. And a financial institution should establish an effective monitoring and mechanisms to identify emerging risks and task timely corrective actions. Thank you, sir. That's all from my side.